Good afternoon, everyone, and welcome to Stock Market Today for Friday, February 7th. It's Ali Coram here, and it was another wild week in the market. News, headline-driven, choppy action. And here to make sense of it all with me is my colleague, Mike Webster. Mike, as always, it's great to see you.
It's always nice to be here and be seen and be with you. It's the highlight of my work week. Honestly,
Oh,
it is. I
wow.
look forward to it all week. I just wish we had a better market, frankly.
Right?
Yeah.
Yeah. Okay. So we're looking forward to getting your perspective, and I think it's also the highlight of our audience's week. Definitely, we've got a strong contingency of regular viewers for the Friday SMT, and we appreciate you joining us. So as always, we've got a lot to get to:
Mhm.
market action, individual stocks. We'll take a look at ETFs to get a sense of the moves underneath the surface, and then of course, Webby will dive deep with his charts as well. So we've got a lot to get to. So let's get right to it, starting with a high level look at the major indexes. The NASDAQ down 1.4% by Friday's close, reversing lower. Another volatile day and volatile week here. The S&P 500 down 1% on Friday, reversing lower as well. The Dow also down 1%. The Russell 2000 down 1.1% on the day. So another roller coaster ride this week, Webby.
Yeah. So this is not what you want to see. And really, we have a trend going. You're always in the market, you're always looking for the character of the market, when the character is changing for better or worse, and what type of trends you see. Now, the trends we normally think of is just like in a channel, going up and hitting resistance, coming down, finding support, and so on. But the trend that I'm seeing is on Fridays having downside reversals. So we had one today, we had one last Friday, and we had one the Friday before. Now the Friday before was a tiny one, right? But it was a downside reversal. And then with those, you expect weakness. Now that weakness was way more than we expected, but it was news related.
Mhm.
Obviously, that it was the AI day, and then the next time, same thing, more news. Then we gapped out on Monday, which is normal. And frankly, I was surprised that we firmed up so quickly on Monday.
Yeah.
That was a sign of real strength in the market, because when you have a downside reversal like that, you gap through your 50-day, which is your red line, and then of course through your 21, and just slice through that, the green line. You're really entitled to go lower, a fair amount lower. It could have taken out the lows, the 18,831, and tried to form like a double bottom type of pattern, but it didn't, and it firmed up. So that was a sign of strength. And then we kind of wedged up this week, meaning, each day we weren't undercutting the day before, and it wasn't like a lot of power. It was just going up. It was nice to go up in the midst of earnings, because not all the
Yeah.
earnings have worked out. We'll talk, I'm sure we'll bring up, well, let's just bring up Google right now
Yeah.
as one of them. And these are the types of reactions that we saw. Now, there were ones on the other side that, had big moves up, but those are more on not the mega caps, kind of the in between, still important, but, like let's pull up Docs that had that big move, DOCS today. So you have things like this going on, which is telling you that the market is still, there's animal spirits there. But for the big important ones, and let's look at Amazon for a second. Certainly not as bad as Google, because that was only down 4%, but still it sliced through its 21-day. And earlier in the day, it was looking like it could have been bought off the 21-day,
Mhm.
but it just kept fading and couldn't move higher. So and let's go to Apple, even though that happened a
Yeah, that was
little,
last week.
that was a ways back, but that kind of set the tone for the mega
Mhm.
caps of going up and then, coming right back in. So it feels like we're in what our good friend Arusha would call a chop fest, where we're just going back and forth, and this is where you can do a lot of damage to your account. And so now at this point, with enough of them failing, it kind of tells me, let's kind of pause and take a step back, be light on the gas. I put on the brakes personally in a big
Yeah.
way. today. And with swing trader, we went, really light in the market today based on the action, but that's a very active product. And I'm a very active trader. And so, I've dialed things back because the expectation with this, an outside day, meaning, our high went above the high from yesterday, our low is below the low from yesterday, and we closed below that along with it being a downside reversal, you expect weakness. Now we're in a news environment, so we don't know what is going to transpire over the weekend or Monday
Right.
morning, but just given the facts that we have, we're going lower. That would be normal and natural. So that's all you can go off of,
Right.
unless you have a crystal ball. So now it's just how much lower do we go? Do we do what we did last Monday and firm up right away, and the prior Monday, or has this enough damage been done where we need to kind of see where the players really are? And I think that's where we're at. I don't want to be too negative. You got to remain flexible, but it looks like it wants to go down to that level. Now let's go to SPY because it looks a bit different there. That one was able to hold, right at the 600 level, which is a nice psychological level, right kind of at the 21-day, and held above the 50-day. The low, in fact, was above the 50-day. So that looks much better than NASDAQ. And let's toggle over to the RSP, which is the equal weight, which is kind of, you're the one that kind of breaks the tie. And this one isn't really doing that much wrong. It had that big sell-off there on Monday, but then was able to quickly bounce up and just kind of holding in tight. But if you look at this as a cup with handle, the way Pattern Rec is drawing it, a normal handle can drift down for a few weeks. So yeah, just exactly as you're drawing it and shaking out below that earlier low that we had, that would be normal and natural. When a stock or an index does that, there's a normal tendency for it to want to test it. And so I would think, that's what we would, that's in the cards. So with that, I've eased off the gas, I've put on the brakes. But let's go back to SPY. I'm ready to slam on the gas if we can get back really above today's high and above that 609.07, because then, it's the market has digested all the news and it's ready to move higher. So sometimes you just got to sit and wait. And Tom Petty always told us, what is the hardest part?
The waiting.
The waiting. Yeah.
Yeah. And just one more thing to add from me. And we've seen this tonal shift since mid-December, and going back a number of weeks. Webby, you said, how do you react in this type of market environment? Well, make sure you are keeping an eye on your overall portfolio risk and looking at position sizing, diversification, all of that good stuff. But like you said, today definitely felt like a day to scale back exposure. The trouble is, like you said, and I think especially heading into a weekend in this type of environment where it is so headline driven, we just have to be flexible and nimble both directions. And so that's a very tricky type of market to be in, but that's also where being an active investor has its benefits, because we're prepared for this, right? We can move, from offense to defense and vice versa. And it seems like that's sort of the playing field that we're in right now.
Yeah, well said, as usual. So let's go back to SPY to kind of give somebody, exactly, kind of what we're thinking here. So the 609.07, the left side high of the base, is the most important line on there from an offense. Yet the 610.78 is important, the ultimate high. But if you get through the 609.07, you should go through that level, quickly. Like that would be normal and natural. If it didn't, if it stalled in between those two, that would be really weird. But so that's the level that's important to then turn on a dime, like you're saying, and be bullish. And Bill O'Neill, the founder of IBD, he was very flexible, and he would be looking at it, pretty much the same way with the distribution that we've had recently in a short period of time, whether you use volume or you don't use volume the way I do, and just look at it distribution in spirit. Like today was a distribution day. Last Friday was a distribution day. The gap down we had before was a distribution day. Monday was kind of mixed because it was both a distribution day, but also a support day. So that's kind of a touch of gray there. But when you get distribution in a short period of time, Justin, Charles, and I study that with the market school, IBD's market school rules, and found it was very important. Distribution over a 25-day period, piling up a lot is important, but really what's important is when it happens over just a very short period of time. And that's what we're seeing here. So you have to be cognizant of that. And you don't want to wait until you're until you're breaking through lows before you start taking action. When you see stuff like this, if you're active, backing away. Now, let's also take it a different view. Let's do the Bob Weird, take a step back here and look at the weekly. You look at that, it's just base building. It just looks like what are you guys talking about? There's nothing's going on. It's just sitting there tight. Yeah. It's only down 0.24 for the week. So it depends on your perspective. And then let's look at the monthly. Let's go out even further. And there's nothing going on. It's a tiny little spread. I know it's only a week into the new month, but so it just depends on, if you're looking at a tick chart or a quarterly chart or anything in between, like and I like looking at all of them, kind of do the mosaic thing. And so that's where we're at.
Yeah. And I mean, what we do know is the best times to make money is when you're in a strong trending market, right, Webby? So
when you're in a power trend.
That's what we want.
Yep.
We're not in that type of market right at the moment. But there are a lot of stocks that are working underneath the surface too. So there's a lot of cross currents. It's kind of a mixed bag. And tricky for new buys with the market headwinds.
Let's just show kind of a Costco, for example. Here's one that, if you're not fixated on the market, and there's something I traded this week and I just exited it just to lock in the gain. But this is what most people should be trading. It was just a classic cup without handle breakout. And if you bought it there, it's doing nothing wrong. Maybe it doodles down for a few days and then goes back up. That's kind of its nature. So if you're trading those stocks, you don't really have to, do much with your account when you've got this type of action. But if you're trading the heat, then you do, there's the quick and the dead, as Bill would say. And, it's better to be quick than dead.
Yeah. Okay. Well, a great review there of the overall market. Shall we take a look at the ETFs now?
Yeah. Why don't I'll just chime in if there's something to be said, but you handle it.
Sounds good. Okay, starting with the weakest first Friday. And as a reminder to everyone, as we're doing this, we are really keying in on what that relative strength line is doing because we want to see how these different groups and themes are acting versus the broad market. So XBI, I think this biotech area tried to make a turn here, but I think it's still a weak area. Retail also looking weak. Damage this week in the market, but you can see that relative strength continuing lower since that November timeframe. XLY, this is consumer discretionary. And in here we have Amazon, which Webby mentioned, down on earnings on Friday, and Tesla also in this one. We don't need to make comments here, but Tesla, I think a notable week to the downside for traders. This is one that I traded and exited down almost 11% for the week. So some notable damage there.
Yeah, with the Tesla, because I have a position there and because my quicksand Grateful Dead rules that I have that I've done videos on, if anyone wants to search for them, I had to sell 2/3 of mine reluctantly this week just because it was breaking those. And to me, it looks like it's a double bottom that's forming, but you never know that. So let's go back to it just real quick on the daily.
I didn't think you wanted to spend too much time on this.
But for anyone who's looking at it, really, unless you're doing a shakeout +3, which is kind of an advanced type of thing, you would be waiting for it to go through 439.74 before you would be buying it. So that's that.
So some damage this week and showing up in XLY there. Next, SMH. This is the chips. Big gap down and now this wedging type rally. So still looks weak there. FNGS, this is tracking the FANG Plus index, which is, the Mag 7, FANG Plus type stocks, still holding in there, even with the
Yeah.
earnings weakness this week.
That's why I wanted to add it in there, was for that very reason. I was going through all the ETFs, and you have to know if you're being very negative or not, and I am right now because of what I'm seeing in the market. So I wanted to, whenever I'm in that mindset, either very bullish or very bearish, that bearish in the short term,
Yeah.
that I want to see things on the other side of it to balance myself out. And I looked at this and it goes, man,
Good.
a lows above the 21 day. I mean, that's really looking nice.
Yeah, setting up very clear
Yeah.
resistance area. Could break
Yeah.
out. Who knows if
Yeah.
the market can get itself together. All right, and here's materials. This is another one that had a strong start to the year, but basically over the last couple of weeks, keeping pace with the market and then taking that step back, underperforming for months on end. The Qs here representing the NASDAQ 100, not as strong as FNGS, trying to hang in there, but definitely, looks like the NASDAQ. Here's IBIT representing crypto, down week this week. This is representative of that risk on mentality. And so seeing this come off there a bit for the relative strength. Technology sector, downside reversal on Friday, but relative strength, trying to pick it up. This is one that has been a market performer for a long time, but has shown weakness in 2025. Financials, we've pointed this out the last couple of weeks as an area of strength, Webby.
Yeah, we were talking about this morning, and I think it's one of the best looking areas out there, in all the stocks in that group pretty much look good. And they have, what's nice about it is if you're looking for a place to play, on balance, they have low ATRs, meaning they don't travel a lot on a daily basis. So I think if you want exposure here, I would just buy the XLF. That's what I was doing. I exited it today just to raise cash, but wasn't really doing anything wrong. This is one of the the better acting areas.
Yeah, and hindsight's 2020, I know, but just trying to really sharpen my eye always to when we get those retakes of the 50-day line that coincide with a rising relative strength line. I love those types of early entries. So this one presented a really good one a couple of weeks ago. Okay, and here's a look at IGV. This is the software sector, which has been a standout group, I would say, in 2025, and even more notably so since we saw that rotation largely out of chips, even though they're trying to bounce back this week. But we saw a lot of software movers this week on earnings and over the last couple of weeks, really. So even with the downside reversal on Friday, you can see that relative strength line continuing to head in the right direction. Software leadership definitely there. It seems like an area for growth investors to keep an eye on.
Yeah, I totally agree. It is a mixed bag there because, like, ServiceNow, for example, they reported
Yeah, that
and they
was
had,
one.
they gapped down, but we had a lot of gap ups as well. So
Right.
it is a mixed bag, but on balance, if you're looking for heat, I would go there rather than to the software rather than the hardware type of plays.
Right. Okay, so that was a look at IGV. Let's take a look at real estate. Also trying to come off lows here, but doesn't look like an outright area of strength to me. Here's a look at industrials forming a cup with handle. That relative strength picked up at the start of the year, and now we're seeing it fade off here a little bit. But who knows? Maybe we can
That
see
looks interesting to me.
some interesting action in the industrial sector. It wouldn't take much to, I think, make it look actionable. And healthcare, this is a shift we've seen in recent weeks, continuing to come off lows and hanging in there. This week, Eli Lilly underneath the surface, retaking that key 40-week line. So it does seem like there are some stocks in this healthcare sector that are trying to turn a corner. Maybe they're not the leaders, but trying to turn a corner after a long time sitting out. And here's a look at ARKK. This is kind of reminding me, Webby, of the FANG ETF here with that relative strength near highs.
Yeah, I mean, it looks good. I'm pretty sure Kathy has a position in Palantir, which we both do. Mine is much smaller than yours. And let's pull up Palantir. And I just want to clap it up for you because please go to a weekly chart and show roughly where it is that
Yeah,
the
where I was
point of all
getting
things
in,
IBD.
I think it was around there in
I'm just so
in
proud of you.
October.
That
Yeah,
is.
that was the week I got in.
I'm. Well, what do you think of this?
I'm holding, so we'll see. We'll see what happens. I think ideally it forms some sort of tight area here. I would love to see a narrow base or a flag-like structure. So we'll have to see if it can do that. But I think that this has a lot of the elements of a true market leader, as Jim Ropel, hedge fund manager, likes to refer to them as, not only with that price outperformance, but with the stellar fundamentals, the story. So this is the way that I'm playing the defense sector, but also the AI software sector as well. I think a lot of institutional money coming into the stock, no doubt, and we'll see where it goes from here. Hopefully, it can hold that round number at 100.
I agree. And the only thing that I would disagree with is, Ropel's a couple years older than me, and I can't believe that he uses that young term, TML, true market leader. Us old fogies call them model book stocks.
Yeah, there you go.
Yeah.
Yeah, I would say it's definitely a model book
Yeah.
stock. All right. We were going through the ETFs. I think we're getting close to the end here.
Hmm.
Okay, consumer staples. This is sort of that risk off flight to safety type area, coming off lows recently. Utilities, sort of a mixed bag here. I know UTES was one of the areas, Webby, that you were looking at for the AI utility plays, wedging up here.
Yeah.
And probably roughly in that 50% retracement area, potentially hitting some resistance.
Yeah. So the ones in this space, and let's just pull up any of them. I don't care. You can pull up any one that you want. Okay. So they all kind of look the same. You had they were up looking great. Then the news hit of the DeepSeek.
Mhm.
And then you had that massive gap down. Now we've bounced up. And for the most part, a lot of them are kind of in the some of them are in the top part of the 50%, give or take, but we want them really living up in the top area for a while and tightening up. So they are tightening up. That's constructive, but we really want them up living up there because right now it just feels like a weak bounce, like a normal bounce that you would have that then wants to come down and undercut
Roll over,
those
yeah.
lows. Yeah, that's the like ANET was one that I was looking at earlier. I know it's not a utility, but they all kind of had the same look, and that was technically in the above the 50% retracement, at least when I marked it. And but still you want it living up above 120, and tightening up and then giving you an entry point. Because otherwise it's just, if I was still in these, I'd be taking this bounce to reduce or eliminate those positions to unless I had a really low cost basis
Mhm.
or something, just because this is not normal action.
Right.
It really isn't.
Mhm. Okay, communication services. We have Google and Meta in here holding near highs. I mean, Meta, what a
It's
champ.
It
Yeah.
doesn't go down. I mean, it's like, look at all those days up in a row. It's clear that money is flowing in there, even if it's just to hide the way they used to do it with Apple, or they would always pick a stock or two, and the big institutions would just go in there and hide. And I think they've figured out that Zuckerberg is dialed in to this current environment and doing the things that he needs to help his stock out. And so it's a
Mhm.
good place to hide.
Yeah. Breakout that is working really well here. And then let's see if that's the end of the list. Nope, we've got energy. Relative weakness here. Gold, lots of strength in gold in recent weeks, Webby.
Yeah, and so I look at, I wanted to add that in here as another reason, on a negative side. We have the FNGS as a reason to be more bullish. And then the gold doing well is more of a reason to be more bearish. It's kind of like when the XLP moves up,
Right.
or the normal XLU, yeah,
Flight
it's
to
just
safety.
if people are going to safety, they're not going to the risk trade.
Yeah.
And we like trading the risk stuff. So it's just, it is what it is.
Yeah. And then jets. This is the travel area, more
So,
focused on the airlines. I think this is looking really interesting and strong too.
yeah, so you have several in there that look good. We've gone over UAL on prior weeks, and my thought on that being a high tide flag and just still holding in there. So that's one that I'm watching very closely. And you can have these groups move even when the market is correcting, because we did have a lot of hotels that did well, and other things in this general space that was doing well. Even the cruise liners were looking good. So it feels like this is where the money is flowing, and that's why we wanted to put jets in there, not specifically just for the airlines,
Yeah.
but for the whole travel.
The travel theme.
Yeah.
You know what? That's such a great segue to taking a look at Expedia, the travel booking site, up on earnings on Friday, 17% gain by the day's end. Strong volume acceleration on both the top and bottom lines here. So a breakaway gap with a relative strength line at new highs.
Yeah. So sometimes this is kind of like market proof in a lot of ways that, if the market goes up, this one should probably go up, and the market goes down, this one can still even go sideways or go up, because the earnings came out during kind of a weak tape, and you saw that it was able to close above the Livermore level, the 200 level, close near the highs. You have the RS line blue dot. Let's go to the weekly on this one. And it's a big giant company, and it's not like it's nosebleed like that has been running forever, but it's been running enough that
Right.
it's really kind of in that sweet spot versus, let's just pull up to contrast, like an Axon on the weekly. That one looks good, but it's been running for a long time. So even though it's in a base and it's got a blue dot, it's more vulnerable than, because the Expedia kind of looks like its prior base in that general position of it. So I like this one a lot. I don't have a position in it right now. What's also good is you had those bad breaks in that last base, and it was able to work itself higher and then form tight areas and then form this base. So has a lot of things going for it. But we do have booking holdings, which is going to come out with the earnings, I think, next week.
2 weeks.
Oh, in 2 weeks. I actually prefer that one, fundamentally, as well as when I put on my Peter Lynch hat, and I've tried both of them out. But Expedia is trading better. So, like, that's just my opinion. Whereas the Expedia is a fact. It is, at highs, breaking out. So what do you do with it? You don't buy it here. You wait for it to tighten up and give you something to trade against. So let's say it's tight for, a week or two. And especially if you get a shakeout in there with an upside reversal, that's the day that you take a shot at it. And then you use the low, or at least what I would do, then I would use the low of that day as my exit. And then if it takes out the ultimate highs there, like today's high, then I would add to that position. Because if you buy it here in a weak tape, if it was a strong tape, I would say, go ahead and give it a shot. But because it's not, or at least I don't feel like it is, that I'd rather just wait and watch it and stock it. And then maybe it's set up at the same time the booking reports. That would be ideal.
Definitely in the right theme. You have the airlines, cruise lines, hotel chain, a couple of hotel chains that broke out this week as well. So it's got that group strength going for it. Let's move on over to T-Mobile, testing a cup entry here today. But this is a stock, if you're looking for ones that have that lower volatility, average true range, that is a little more palatable in a choppy market environment, this is one of those stocks.
Yeah, I was looking at this one and AT&T. Let's just pull up AT&T for a second. And this was looking good as well, but let's go to the weekly on this one and go over to the quarterly numbers. So they're just not there. Whereas T-Mobile they're not great, but they're a lot better.
Yeah.
And you've got that acceleration there, 16 through 40, and like the earnings are nice, but it's the sales that are just mediocre still in the low single digits, but or the
Kind
mid.
of the nature of the beast of this type of business and company in the mature stages, it feels like.
Yeah, that's a very good point. And I use their service, and I'm relatively happy with them, and so that counts a lot for me. When I'm looking at a stock, I do that, and I used to have AT&T, got rid of them to go over here, so that's a positive bias towards T-Mobile. And what's nice is it trades tight. You see on the weekly chart all those blue areas. That means that those 3 weeks or more that are tight. So this is kind of the merchandise that I'm looking for right now rather than the heat. But let's go back to the daily to see how you actually get into it. Really, the way to get into it was right there. So now it's extended from there. So now that it's up at its highs, you hope that it handles out and forms a high handle here and gives you an entry point there. So that this isn't actionable right here because it would be a stretch to buy it, even though it's right at its standard pivot. I would hold off, but I really like the action with that RS line.
All right. And we talked a lot about a strength out of the software sector. So let's take a look at a stock forming the right side of a base in this area. So a potential setup to watch. Maybe we'll get a handle forming here. And that is Samsara, ticker IOT Webby.
Yeah, so we have this on Swing Trader this week. We took it off today just to lock it in because of what was going on with the market. It's not doing anything wrong, but it's certainly entitled to handle out here. You want to know, like, where does a handle normally happen? Well, it happens here, where you're close to your old highs, but not right up there. And then so drifting down would be normal and natural. Kind of had like a mini handle there, that it just broke out of, and that's what we were trading it out of with a nice upside reversal. Shakeout under 50, but something to be watching. And earnings aren't for 27 days, so you have kind of a little bit of time on your side. But let's go over to the weekly, and those are solid sales growth. That's it's decelerating from the 40s into the 30s, but still steady. Every quarter, and the earnings line looks good as well. So these are the types of stocks that I'd be looking for, but look at how different this one is than a T-Mobile. Like, it is a whippy stock where it breaks out, forms a base, breaks out, forms a base, but just kind of inches higher. So it's it's a
Finally went
difficult
on a
one.
run.
Yeah,
The last time.
yeah. You have to be
Yeah.
persistent if you're going to trade this one. So
Yeah.
that was another reason why we just locked in our small profits.
Yeah. Okay. Well, I think I will hand the reins over to you, Webby.
Okie doke. So the stress begins because I'm going to share, and I hope I don't end
You
this.
can do this.
Can I do it?
Weekly SPY.
Okay.
There
We
we
did
go.
it, right?
We did
Okay.
it. You did
So
it.
we're doing the Bob Weir take a step back the second time today. And while these bars look good, or the candles look good, what's notable is the top wick. So from your open is down here and your close is here, and that's why it's blue in there. But it traveled all the way up here this week. It traveled all the way up here this week, and a little bit of travel there. So that's a kind of a 3-week candles in a row. Like it's really a mixed bag. You want to see a big candle at the bottom, or a big wick at the bottom, not at the top like that. So that's a negative. And then, frankly, the Nasdaq looks worse because you've got all these wicks up on the top, just telling you that by Friday you can't close near the highs. On the other side, you had like this is the perfect week back in November, but you can't get everything you want. So let's go over to the regression stuff, and just a reminder: the regression on SPY was dead really around December 18th. We're just waiting for enough days to put a new one on there. And then the same thing with the Nasdaq Composite that died more over here around January 13th or so, give or take. And that one still needs more time. And we'll be using that this low right here, the 13th, once we have 30 days or so from there. So we'll move on to the 50% retracement. Oh, I had the A net. This is what I was looking at
Yeah.
earlier.
Yeah.
So here was the top, here was the bottom. So it's just a little bit above it. So you want some sort of structure in here
Yeah.
for a week or so. But let's go over to SPY. SPY is still in the top half, and you can slice this a million ways, but I'm using the high from December 6th and our recent low here on the 13th of January. And from this angle, looks good. Like if you're just isolating on that, it passes that test with flying colors, really. Not so much on the NASDAQ. It tried to stay above it, and then we closed right back there. So you really want to be living above it. And it's not doing that. And so let's go back to SPY for a second. And we'll just go to an intraday, and we will make sure that we are on regular session. Yeah. So if you just use your high and your low here from this level to this level, so you can do it from like short time frames. You're in the lower half. If you do it from over here down to here, so it's just, I do this on all time frames. You can do it on weekly, monthly, and so on. So
there's an art to it.
Yeah, I encourage people to do that. Now let's go to our levels. I tried to make this, I was thinking it was a little bit cluttered before, so I wanted to declutter it.
Yeah.
Maybe I decluttered it a little too much, but here are our levels. On the upside, obviously the old highs, or our high on January 24th, but really what I'm looking at is the December 6th high. That's the green dash line. We're not far from there, but on the downside is here the 590.93, which I believe is coinciding with the day before the follow through days low was, so the January 16th low. That's kind of the equator line. We're still well above that, so I'm being very proactive as far as being negative on the market. It's just this wedge up, a break, a wedge, break, a wedge. It feels like it needs to change that character, and I think it's going to take some damage for that to happen. And you can see it even more here on the NASDAQ, a break, wedge, break, wedge. It feels like it needs to come in here, but just looking at the facts here, we've got the high from January 31st that we want to get through. That's a green line there. On the downside, we've got the 19,335, which is again coinciding with the low of the 16th. And then we have the low that we set here on February 3rd, and then ultimately way down here, our low from the 13th. So we want to stay above those levels, but how we test them is important. Now we're going to just do the very simple thing and look at the 21-day. And we were able to close just right, pretty much at it, just slightly above it on SPY. So that's good. We want to have our low above it, but we don't have that right now. And that's what we're hoping to get sooner rather than later. And then the same thing with the NASDAQ composite, and just the fact that it just can't stay above it, stay above there for a few days and come right back below it. That's I've just done so much work on the 21-day that really bothers me when you can't stay above it. And it's just probably why I'm being so Debbie Downer today. But we will, it is what it is. I will switch over to the Webby RSI. Hopefully that works. Can you see my Webby RSI? Okay. So with this one, there's no Webby RSI to see, because again, that would be the blue histogram here measuring the distance from your low versus your 21-day, and it's just not there. So we will move over to SPY and see that it's not there either. We had one for a day there on the 6th, and it went away, which is also why I just lean heavily on this. When you don't see a blue wall like you had over here or over here, or let me just even go back to, back over there, you're in a chop zone just by definition, or by my definition. And so just food for thought to dial things back until you're not in that area. Let's go over to the Bob Marley. And it was was Bob Marley's birthday yesterday, and I was so impressed. My parents texted me last night. They're like, "Did you know it was Bob Marley's
That's
birthday?"
so funny.
I'm like, "Yeah," and it was Axl Rose's too. But anyways, I was proud of them. So here's the green area. And we're right up in there. We're doing nothing wrong from this indicator. You just want to
Right.
be intellectually honest, whether you're bullish or bearish, and you look at your indicators, and that is
Mhm.
still green, and why we've color coded it that way. And let's look at the NASDAQ, same thing there. It's still green, nothing to see there. Really, if you undercut 3 ATRs off your high, which this is measuring your ATRs off your high, then that's when it's starting to break character really in a big way, like a little over 4, like 4.4 ATRs off your high, which is what happened on January 13th. That would be a change in tone and in character. And there it is on the cues. And let's look at the RSP one last one. And I was trying to get back in there. And we just wanted to start, be more in the twos or higher. And that's all she
Okay.
wrote.
All right. So, final thoughts to wrap everything up as investors prepare this weekend for the week ahead.
So what I would suggest doing is when you screen, I would screen for ones with stocks that have a low ATR. So in market surge, we have an ATR, several of them. I would use the 21-day percent and put that just as a frame of reference. Something over 6 is high. Some of them meaning that it travels with 6% in a given day. So 6 and higher is that's heat. That's what you want to play when the market is really going and you want to,
Yeah.
hit it hard. For now, I would really stay under 3, but be willing to change on a dime. So I'm going to have a watch list for all things. I'm going to have a watch list for things that I want, inverse ETFs. Like I've got a position in SQQ that I put on late in the day today to kind of hedge some positions that I still have, as well as just, as an outright position. So I'm going to be looking from that lens is if we break down, but I'm also going to be looking, most of them are going to be the slow pokey ones, like a 3 ATR or lower. The lower, the better, frankly. And then, I will have some heat there in case we really go, like if we get some great news over the weekend, like tariffs are going away, or we just don't know what the news is going to be. If we lift up, then that's a big deal. One news item that I would be looking for would be when Powell talks about inflation expectations. So today, half an hour into the day, we got the ISM numbers. In as a part of that are the inflation expectations of 1 year out were a huge jump into the 4s, and that is a big deal. Now, the long-term inflation expectations still were relatively okay, but the 1 year out, and it's probably around tariffs and
Yeah.
uncertainty about how that's going to play out. So if we get some feedback from either Powell or the Fed of how they're looking at that, I think that will help out the market. Generally they really hate inflation expectations ramping up, but they're more concerned about long term than short term. So just be careful out there and just have a game plan. Email yourself this weekend. Just say, if we break out above 609 and change, I'm going to do this. If we break below X level, I'm going to do this. That'll help you come Monday to, not freeze up,
Yeah.
not freeze up bullish or bearish.
Well said, Webby. Thank you so much as always. We
Sure.
appreciate those actionable insights. And thanks everyone for tuning in. That is it from us for this week. But you can be sure that we'll be back on Monday morning, starting with IBD Live, investors.com/IBD Live for all the details on that. Our daily morning live stream starting 10 minutes before the opening bell. So we will see you there. And then we'll see you right back here on Monday after the close. Hope you have a great weekend.